Good evening and welcome everyone to our Q4 FY20 press conference. We request all participants to put themselves on mute and unmute only when we ask them. This is important to ensure the quality of this video conference. Our leadership team is present here to discuss our results. We have with us today Mr. Rajesh Gopinathan, CEO and MD TCS.
Hello, good evening everyone. This is Rajesh here.
Mr. NG Subramaniam, COO TCS.
Hi everyone, this is NGS speaking to you all remotely from Bangalore. Nice to be connecting with you.
Mr. V. Ramakrishnan, CFO TCS.
Hello everyone, good evening.
Mr. Milind Lakkar, CHRO TCS.
Hi everyone, good evening, speaking from TCS Pune.
We will now begin with our CEO, Mr. Rajesh Gopinathan's opening remarks, after which we'll take your questions.
Thank you, Arushi. Thank you, Arushi, and good evening once again to everyone. First of all, probably you can just stay away from that slide for a minute. Let me just finish my opening ones. And as I said, first of all, I hope all of you on this call and all your friends and families are safe in this unique environment that we find ourselves in. We've had a quarter of which we will talk a lot more about, but I'm sure that many of you have many questions about what's going on in the environment. And I want to first give you an overview of that before we get into the actual numbers of this quarter and the year gone by. The events of the last 2 weeks of March are well known by everyone. And it has actually been both a challenge as well as an opportunity to test many of the beliefs that we have had. And I'm very happy to share that TCS has come through in a very, very challenging phase in a manner in which we are all quite happy and confident about the place that we find ourselves in. The question that will be primary in all of your minds would be that what does it do to the business from a short term as well as from a medium to long term perspective? And I want to address that in 4 basic buckets. First of all is in terms of our operations and the impact it has had on operations and what we are doing in that space. The TCS delivery model, and especially its India delivery model, has been optimized for very large, sophisticated delivery centers. And this challenge actually brought into the biggest question as to what does this do to the overall delivery model. We will be talking in a great more detail about it, but the summary is that in a matter of a few weeks, we have gone from a highly integrated, highly co-located delivery model into a highly dispersed and a very technologically coupled delivery model. Most importantly, while being able to maintain our execution capability, our quality processes, our delivery governance processes, and our security processes. So the ability for the company to seamlessly operate in this extended operating environment is one of the biggest positive takeaways that we have had in the events of the last few weeks, and which position us very strongly to know that we have the resilience and the adaptability in our delivery model as we go forward. The second dimension to this is the impact that it has in terms of our customers and the way we relate to them and the way they look at us. There also, I'm very happy to share that invariably across the board, we have received very strong and positive feedback from our customers who have seen this in action. And after it took about a week or 10 days to stabilize, the kind of the experience that they've had in terms of seamless transition, in terms of the same high standards of quality, the same high standards of delivery certainty and execution rigor, that we have been very fortunate that almost all our customers have been very forthcoming in their praise for the work that has been done by our teams and are continuing to be done by our teams. And their confidence in TCS as a trusted partner and their confidence in the kind of delivery capabilities that TCS has been further strengthened by the events of this last few weeks. From the perspective of our own employees and the talent, again, this has actually strengthened our core belief in our talent model. As you all know, that fundamental to our operating model has been the approach to talent. And we have always believed that investing in and staying true to our talent base is at the heart of the company's success. And I'm very happy to say, and I'm very thankful to the 450,000 odd TCSers who have gone over and beyond in terms of making sure that this unexpected challenge was taken very boldly on the front foot, and the company has actually transitioned into this new operating model. It further reaffirms our belief that a long-term approach to talent, both at an aggregate as well as an individual level, as evidenced by our industry-leading retention rates, is a two-way street, and it pays back handsomely when the employees also stand by the company so beautifully in its hour of crisis. We are extremely focused on this element of it, and while in its current scenario, a big component of the focus has been in ensuring the health and well-being of our employees. We are also further committed to our approach towards talent, and we are going to double down on that by our commitment to make sure that every offer that we have made will be honored, and we shall stand true to any of the offers out there. And we also want to reaffirm that our commitment to our employee base is total, and we don't see any form of retrenchment or any such activity happening due to the cause of the demand side events, which we are sure that will even accelerate in the coming few weeks and months. So our talent model is been proven that that is the right model to go on, and our principles of talent management will only further be increased or strengthened as we go forward. Finally, coming to our financial model, I'll get into the granular details of this quarter and this year's performance. But again, there are fundamental principles on which our financial model has been built. One of them is that we're focused on profitability and growth and stability and industry-leading metrics on that. We are happy to report that in this quarter, despite all the near-term challenges that we see, we have been able to maintain our profitability at 25.1%. And since I'm sure many of you are itching to ask the question, let me also address the fact that our long-term profitability model and the target band of 26 to 28 that we speak about, we believe that even that stance is still secure, albeit with the fact that there would be short-term volatility around it. So our confidence in the long-term profitability model is unshaken. We look at the near term, and we think that if you look at it from a financial perspective, the impact on the revenue side of what is unfolding around us is comparable to the global financial crisis, and its peak impact is going to come in the next quarter. And the peak impact is likely to be somewhere in that range, plus or minus a few percentage points. As we look forward beyond that, while it is difficult for us to predict exactly what the path would be, assuming that the peak is in Q1, we have modeled it and we believe that we should be able to get back to where we were in Q3 20 by the time we get to Q3 21. And that is the kind of expectation that we have. And within that, we think that if we were to do that, even modeling a worst case scenario and the kind of visibility or the approach that we think we have, the levers that we have, we believe that we should be able to defend and the exit rate of Q4 FY21 to be similar to where we are in Q4 20. And the intermediate periods are going to be a fairly uncertain setup. So our financial model in its structural elements, both in terms of growth as well as in terms of profitability, we believe that if we were to take it forward to Q3 or Q4 of the coming year, we should be at a similar position to where we are today. And the short-term impacts, which are difficult to call, will have to play out, and we'll see, and we have been modeling on those lines. So the key message that I want to leave to all our stakeholders is we are in the midst of a storm, no doubt about it. And more importantly, the storm is going to get a lot worse before it gets better. But it will get better. And our commitment to all our stakeholders, our employees, our customers, our investors, and to all other stakeholders is that we are confident that we have a good ship and that we have a good crew. And we believe that we have what it takes to come through with this. And that's the confidence that we have had from the events of the last few weeks. And that is the approach with which we are looking forward into the coming months and quarters. So with that, I want to take a few minutes to talk about a few key highlights of the quarter and the year gone by. And we would be happy to take questions later on in any of these aspects done. Looking at Q4, we have closed Q4 with a year-on-year constant currency growth of 3%, giving us a revenue of slightly less than 40,000 crores. More importantly, as I said, despite the sudden and severe impact of the COVID crisis on our last 2 weeks of performance, we have been able to maintain our profitability at the operating profit level at 25.1%, which is flat on a Q-on-Q and a year-on-year basis. Net margin has also been good, and cash conversion and various health metrics of this revenue line is also quite good. Our conversion of cash from operations to net profit has been at almost 110% in this quarter. Similarly, looking at other structural elements of the performance, our growth in the customer base across various revenue bands continues to be very strong. The number of customers for whom we generate more than 100 million of revenues per year has increased by 5 and now stands at 49. From our focus on increasing the IP and IPR-led focus that we have had in the company continues to pay rich dividends. And we now have more than 5,200 patents that have been applied and about 1,300 plus patents that have been granted. In terms of patents granted, that's an increase of almost 400 on a year-on-year basis. From a people perspective, our retention rates continue to be best in class, with attrition remaining stable at 12.1%. And we continue to add the best talent in this industry. From a segmental perspective, no surprises here. We have relative outperformance compared to company average from Europe, while US has been weak and continues to be weak in the near term. Similarly, from domain perspective, life sciences has continued to outperform by far the company area. And communications and media has been one of the most resilient in the last, I would say, 4 to 8 quarters, and that continued its performance at about 9%. If I can go to the annual performance slide. From financial year 20, one more milestone, albeit a mathematical one. We crossed $22 billion of revenue in this year with a growth of 7.1% in constant currency terms. Our operating profit for the full year was slightly at 24.6% and our net margin at 20.6%. Our cash from operations for the full year also is very healthy in terms of conversion, ending at about 110% of net profit, which translates to about 35,400 crores of cash generated from operations. The other metrics are similar to the ones that I highlighted to you in the quarterly performance chart. So let me once again close this opening presentation by saying that we are in the midst of a fairly challenging times. But over the course of the last 4 quarters, I am amazed and thankful to the stupendous effort of all TCSers who have gone way beyond anything that we could have dreamt of. Even maybe a couple of months back, we couldn't have even dreamt the kind of situation that we were in. And the kind of response that has come through from each and every member of the company is something that we are extremely grateful about and something that we are very, very proud about. And I want to thank each and every one of them. We are also very appreciative. I spoke about customers being profuse in their praise to us. We also want to appreciate our customers who, despite their challenging situations, have also reiterated their confidence and support in TCS and have continued to look to us as being their strategic partners as we stand shoulder to shoulder to them and deal with this crisis on an ongoing basis. Overall, I believe that the structural elements of the company are very strong and we are well positioned to take on the challenges ahead of us. And with that, I want to hand it over back to Arushi.
Thank you very much. We will now begin with the question and answer session. In the interest of time and to give everyone a chance, request you to restrict yourselves to 2 questions each. And our first question is from Kritika Saxena from CNBC TV 18.
Hi, gentlemen. I understand this has been a difficult time for everyone. I hope you're all safe. You started the 4th quarter on a very strong note, 2 big deals that came in. So Rajesh, I want to understand from you, as you're entering Q1 now, very specifically, what are clients saying? You know, there are talks about freeze on discretionary spend, about clients perhaps asking for discounts going up to even 40-50%. I want to understand how are clients reacting to this pandemic? And separately, I also wanted to get a specific color on which are I understand retail is hit, I understand travel, transport is hit, but from your perspective, your clients, which are the verticals that are expected to have the maximum amount of hit? That's to Rajesh. If I can ask Ramki as well. You know, Ramki, as Rajesh pointed out, you factored in 2 weeks of the impact of COVID so far. Of course, the biggest impact is now going to be on Q1 and Q2. So can you give us some color? I understand it's early and you're still factoring in the hit, but can you give us some color on how pressurized the margins will be and what would be the hit on utilization? And if very quickly, Milind can give us some perspective. Rajesh clarified as far as the issue on retrenchment is concerned. I'm very happy about that. Could you just give us some color? How many people are going to be onboarded this time? Any perspective on promotions, on increments? What is the hiring outlook like and the HR outlook like as you move into this era? Thank you.
Thanks, Kritika. That's a whole series of questions you laid out. Let me take it one at a time. As you can imagine, there is a full spectrum of client responses out there, and there are no guesses. There are extremely stressed clients, and depending on where they are and what the nature of the relationship is, the asks are also of varying nature. The approach that we are taking is that we are doubling down on our strategic relationships and we are taking each and every situation on a case-to-case basis. We are looking for win-win solutions, but our focus is to ensure that we stand by the customers in where their main challenge is, and to ensure that our talent is made available to address the issues that they are in. So depending on the situation, we are in many cases repurposing project teams from different projects onto areas like a big component of underspend, which is getting addressed right now, is migration to the cloud. A lot of activity going on in terms of strengthening security, cyber security, and overall enterprise level security monitoring situations. Similarly, there is a lot of focus on leveraging, assets that are already been on the shelf, especially in areas like the new age digital workplaces, collaboration tools, etc. So we are seeing this kind of shift of spend from certain projects to different kinds of projects, both reactionary as well as proactive. And our focus is to stay on those kind of opportunities. The impact wise, I think unlike the GFC, this time the impact is much more broad based. The few industries that you mentioned were at the forefront of the hit, but the impact has very rapidly actually cascaded across almost all verticals with the economic lockdown that is going on. So different customers are at different levels. I don't think there is much to pick and choose in terms of the extent of impact, but we are taking a very, very constructive view on a case-to-case basis.
Yeah, I think Kritika, your question was on the margins part of it. So if we look at in the Q4 and just in the 15 days, most of whatever was there was in terms of getting to this entire large part of the company working from home. So that transition, etc., had the impact. But that perspective, that from management of that has significantly even changed from where we were. We were already at a very high level, but from there into the Q1. So from a, if I can call it the supply side of how we will manage from a delivery of projects, from the utilization or from productivity or any of those aspects, we will have even a better window than what we had in those 15 days. But coming to the demand side or on what we will do from the customer perspective, as Rajesh already alluded to, in the short term, we are going to have definitely a contraction. And he talked about what happened during the GFC and something similar or probably even more than that during this particular period. So what we will do and what we are already doing is looking at costs completely across the board. So there's nothing which is not subject to review at this point of time. So because we cannot predict as to how the demand situation will pan out in the next in the short term. So we will have to make sure that we optimize as much as possible in the short term on all our elements of cost. So that's what we will do. But from our internal, your earlier question on how we will manage from a utilization, etc., we are in a better wicket than what we would have been in the first 15 days of the last 15 days of the previous quarter.
So Kritika, you asked about hiring. The first thing is we will be honoring all the offers we made to the campus. 40,000 offers we made to the campus this year. Most of the academic institutes will basically close their term only by mid-June and July timeframe, and we'll start onboarding those trainees coming in from that point till the end of the year. So we will honor all the offers this year, in spite of whatever situation we are in. That is the strategic intent of our organization, and we will continue to basically walk on that path. Second is regarding promotions. Promotions will continue. The quantum of promotions will depend on the business performance, right? And we'll evaluate every quarter, and based on that, we'll decide the quantum of promotions. Regarding salary increments, we have decided not to give any salary increments at this point in time.
Thank you, sir. Our next question is from Sajid Mangat from Bloomberg Quint.
Hi, Rajesh. Good evening. Hope everyone is fine at TCS. You spoke about the current crisis and you compared it to the GFC. In 2008-9, your revenue base was around $6 billion. Now you're sitting on $20 billion of revenue. Can you shed some more light on the kind of impact we can see on the revenue base? We saw Ramki talking about some contraction that may happen. Can you just give an elaboration? Because if you use the same percentage scales, then it would be much more on absolute numbers. So give us some perspective on that. Second, your thoughts on how the behavioral changes is going to impact the IT companies and in fact TCS going forward. You've seen a model where work from home is happening. Some of the companies are saying 90 to 98% people are working from home. This also puts in an opportunity for many of the IT companies in terms of cost saving or going diverse delivery model, but it brings in some bit of cost saving as well for IT companies. That one, and finally, is there any change in your capital allocation policy?
Okay, you're right. We are a much larger company than we were, and what I was alluding to was similar percentage impacts. So the absolutes will change, but the percentage impact, as I said, very difficult to say what exactly the number will be, but you can take that as the benchmark, and plus or minus a few percentage points on either side of that is a fair assumption to work with. We'll have greater color as we go forward, but that's what we are internally working with and modeling on. Coming to the operational model, which is what I actually started my talk with, I believe that while the actual operations are shifted into a distributed model, everything else, whether it is from a quality perspective, whether it is from a delivery perspective, from an execution perspective, all of that we have been able to translate that into this new operating model. And the reason for that is that we have been actually on this path for a few years now. So we introduced this concept of location independent agile and open agile workspaces. And the idea there was that we introduced the concept of the ODC to the world. And we were the pioneers of the ODC and working environment. And we did that a few decades back. And for the last few years, we have been actually pushing that concept to its next evolutionary path by what we call the open agile workspaces concept. This opportunity has actually allowed us to accelerate that shift even beyond to the next level of evolution. And we rolled out very rapidly an operating environment called the secure borderless workspaces. And this is not just about moving the person out from the office and allowing a laptop or a desktop located in the house to connect. It is about taking the entire elements of the operating model and being able to deploy that into this kind of an extended environment. And this, what we call the SBWS model, the secure borderless workspaces model, is the reason why customers are so appreciative of what has happened. Because other than the fact that the person has actually shifted out, no other perceptible reduction in quality or certainty has been noticed. In fact, we are seeing increased levels of productivity in certain instances and an increased level of engagement, which we are very, very focused on and trying to see how we can tap into it. So it is, you are right, we are not going to go back to where we were. And the reason we have been able to actually get on top of it is because we already had invested in building those processes and systems, which is getting accelerated currently. It's about time also, because as I said, our current operating model is almost a 20-year-old legacy. And in some ways, this crisis actually leapfrogs us into a new model, which we are starting to call the SBWS 25 by 25 model. And once again, NGS is the champion who's putting together and driving it across the organization at a scale and speed, which frankly is just unbelievable.
What about the capital allocation policy?
There is no reason to change the capital allocation policy. The capital allocation policy has been very stable, which was that we would return 80 to 100% of our free cash flow net of investments to our shareholders. And I don't think that the current environment changes that in any way or form.
Thanks, Rajesh.
Thank you. Our next question is from Chandra R. Shrikant from ET Now.
Yeah, hi. Thank you so much. Rajesh, my first question to you. You made a very interesting comment about how, you will be in Q3 of the current fiscal where you were in Q3 the previous year. The statement is coming at a time when companies like Cognizant have sort of withdrawn their annual guidance. Wipro has suspended quarterly guidance. Accenture has pulled back on guidance. So what is sort of giving you the confidence or the visibility for now? Because people are saying that it's difficult to predict when things will come back to normal. Also, your high exposure to digital, is that a handicap in the short term? Because people are cutting back on discretionary spends for now. Analysts are also concerned about your high exposure to the travel and hospitality space. Some people peg it at $1 billion. What impact is it going to have? One question to the CFO, Mr. Ramki, on the margin levers that he has at this point, because the typical margin levers, I'm not sure how much of it you can use at this point. So will this involve, cut back on travel, cut back on other things? What kind of margin levers will you have? Will the rupee depreciation help you at all, or will it be absorbed by clients as a discount? NGS, Rajesh mentioned about how you've moved from a global integrated delivery model to a dispersed model. Will that sort of take away some of the gains that IT companies have had all these years because they've had such a seamless, global delivery model, and they've been able to do this at scale? Thank you so much.
Okay. Try to remember all your questions that you asked me. I'm not sure that. So the first question was, I think you were asking about guidance. Let me clarify. This is not a guidance. What we are telling you is what we see in the near term and the operating model with which we are currently approaching it. So as I said, as a management team, our expectation is that we are likely to see something similar to the GFC, and we are modeling a return back to normalcy in the Q3 period. The reason we are sharing this is that in normal circumstances, we have maintained that providing guidance is not our policy, and we believe that that is something that analysts are much better positioned to do and to model the ebbs and flows of business as usual. But we are not in business as usual, and it would be unfair for us to expect analysts to model what we are working with. So we are sharing with you upfront the operating model under which we are actually putting down our strategies and our plans. And if there were changes to that, we'll come back and look at it. So I don't see this as we are not going away from our strategy of not providing guidance, but we are staying true that we will actually provide the information that is required for all our stakeholders to be able to deal with it in an objective manner as possible. What was your second question? What was
the one on digital, your high exposure, will it be a handicap in the short term?
No. We have a very, very different point of view on that. In fact, if there is anything that this crisis has done, is going to be to accelerate all the trends on digital, whether it be automation, whether it be agile, whether it be the shift to cloud. And we are seeing that already in action in our client universe. Many customers are turning to us and saying, how can we help them accelerate the migration to the cloud? How can we help them accelerate the rollout of the digital workspaces environments that they have? So we are seeing this. The short term is different because of where the economics of it is, but the medium to long term, we see this as a huge boost to the digital side. And the capabilities that we have invested in and the talent that we have created is going to hugely spent in the way we tackle the opportunity in front.
Travel and hospitality part, Rajesh, your exposure to this vertical.
In proportion to our revenues, we are very hugely a big strategic partner to this vertical. But again, as I said to Kritika's question, we think it is not that a sector is going to be entirely impacted. It is a short-term impact might be different by sector,
Right.
but the impact of this economic shutdown is going to be widespread. So what is more important is that what is the nature of the strategic relationship that you have, and as they turn around, are we able to participate in that? And we are very, very focused on staying true to that, where we are staying with them, trying to help them through it, and positioning ourselves for making sure that they get back their business as soon as possible.
Thank you, Sandra.
Yeah, you had a question on margin. I think, as I mentioned earlier, in the short term, every item of cost is a potential lever. So it's not just any one or two. How we will succeed and what extent we will succeed in each one of them is relative. And you mentioned about travel. Travel costs will come down in the short term, but that's one of the items.
Rupee fall, will it benefit you or help you at all, sir?
See, currency we have always maintained is something which we manage, whether it is up or down. And that is quite well understood with our customers because currency is very intrinsic to our model. Having said that, in these times, there will be customers who will ask for sort of reduction in their overall cost. And so those discussions will happen on a client-to-client basis. And there are multiple ways in which it can be handled. So that's how it will be. I address that question.
Thank you, Chandra. Our next question is from Kushal Gupta from Z Business. Kushal, please go ahead.
Hello.
Arushi, on the dispersed model, the question I have not answered yet.
Okay, sorry.
Can I?
Yes, sir. Please go ahead. Please go ahead.
Chandrika, thank you for that question. I think, I just want to give a perspective on the.
Sir, Chandra, sir.
Thank you. I just want to give a perspective on the complexity and the mammotherness of the task that we accomplished in the last 3 weeks. See, we have a strength of about 355,000 employees based in India, right? To move from what Rajesh articulated as a fully integrated at work kind of a model to enable them to make sure that they are productive and they are able to connect it to TCS systems and customer systems and networks securely. It's a huge job. So we have had, we are having actually our own COVID heroes, right? First, I want to thank them. I want to salute their tireless contribution day and night over the last 3 weeks, right? This movement has happened amidst a lockdown, amidst the severe restrictions on people and movement, etc., etc. So I'm pleased to report that we are close to about 90% of the employees in India are now enabled through what we call as secured borderless workspaces that enables them to continue to support our customers' essential and critical services seamlessly. The customers are really happy with what we have done. Our employees are happy with what we have done because we have prioritized their safety, their family safety, and their well-being as a first priority. Secondly, we concentrated on making sure that the essential and critical services that we provide to our customers are sustained. And all this have been accomplished in a most secured manner, and by which the work is being performed without compromising on any of the security aspects that our customers are used to. So as we spoke to our customers, and customers were amazed at the speed and the alacrity with which that we have moved and operating on this. And in fact, they are now offering some of the work that our others are not able to handle it. And some of the work that, those extra volumes of work that we are able to handle it. In a disbursed model, as you referred to, we are seeing that our team is able to handle those peaks and troughs of the volumes of transactions that are coming in. And at the same time, we are seeing that the productivity, the velocity, the throughput of work has significantly increased. So I don't believe that the gains will be lost. There will be a lot more to gain in this new model, because there is going to be there's a greater realization that we have had. These are initial findings. It will get refined over the last 3 weeks. The experience that we have has been truly amazing. Our initial impressions are that what we call as the 25 by 25 model entails that we don't believe that we need to have more than 25% of our workforce at our facilities in order to make all the 100% productive. Right? I think that's one greater realization. The second is that we don't believe that every employee need to be present all the time in our offices. I think it's sufficient that they spend 25% of their time in our offices. Right? And the third is that we believe that this particular model and way of working, and we believe that we'll be in a position to achieve about 25% improvement in velocity, throughput, productivity, whatever we want to call it. And this is coupled with our overall machine first thinking. Okay, and we also believe that as we move along, 25% of the project team of any project may not locate in one single location. Right? There are several learnings that we have gained over the last 3 weeks of working, but I'm really pleased to report that 100% of our customers' services that we are doing, we are now on track. More than 25,000 projects that we are tracking, that we are executing across the globe, we are tracking on a daily basis. We have the digitized dashboard that we have, the delivery processes that we have, all of that have immensely helped us. And we believe that the way that which we have moved, the whole secured business, secured borderless workspace concept that we have put in is going to put us in a much better situation to capture the demand as our customers are moving towards resiliency and agility in their future in a post-COVID scenario.
Thank you, sir. Our next question is from Kushal Gupta from Z Business. Kushal, please go ahead.
जी बिल्कुल, गुड इवनिंग आप सभी को। सर मैं ये पूछना चाहता हूँ सबसे पहले डिमांड साइड को लेकर, और यहाँ पर मेरा सवाल ये रहेगा कि कल मैं कुछ एक बैंकों की जो अर्निंग्स रिलीज हुई है यूएस में, चाहे आप बैंक ऑफ अमेरिका, सिटी या गोल्डमैन सैक्स को लीजिए, वहाँ पर जो इनका मुनाफा है वहाँ पर काफ़ी गिरावट आई है, करीब 40-45% की गिरावट हमें देखने को मिली है। तो लोन लॉस प्रोविजनिंग जो है वो कहीं ना कहीं वो ज्यादा फैक्टर इन कर चल रहे हैं। तो अगर ऐसा हो रहा है वहां पर, तो आईटी स्पेंडिंग उन पर्टिकुलर बीएफएसआई स्पेस जो कि आपके आय का एक सिग्निफिकेंट हिस्सा है, करीब 30% हिस्सा आता है, वहां पर कैसा इम्पैक्ट जो है हमें अभी देखने को मिल रहा है आप जब वहां के बैंकों से बात कर रहे हैं? पहला सवाल ये। और दूसरा सवाल, यूएस में आप देखिए 10% जीडीपी का उन्होंने स्टिमुलस पैकेज तक का भी अनाउंसमेंट किया है कोविड को देखते हुए। तो वहां पर जो अभी अगर कोई रियायतें आती हैं, कोई रिलीफ आता है, तो इन लोगों के लिए जितने भी बीएफएसआई स्पेस है, क्या वो एक रिलीफ मेजर बन सकता है?
कुशाल, आप जो पूछ रहे हैं इसका सीधा और संयम जवाब देना बहुत ही मुश्किल है। ऐसे समझ लीजिए कि जो अभी जो आप उनका रिएक्शन देख रहे हैं वो एक्चुअल लॉस नहीं है, बट वो कंजर्वेटिव अकाउंटिंग प्रोविजनिंग है। एंड जो रिलीफ पैकेजेस जो अनाउंस किए गए हैं वो एक्चुअली रिलीफ पैकेजेस जो टारगेट कर रहे हैं वो इनके कस्टमर्स को टारगेट कर रहे हैं। तो अगर वो रिलीफ पैकेजेस वहाँ पहुँचते हैं तो ये जो लॉस प्रोविजनिंग है अनुमान लगाया जा सकता है कि शायद इससे बेहतर हो एक्चुअल आउटपुट. So this kind of model is too complex to do. जो GFC टाइम पे जो इम्पैक्ट था वो एक्चुअली बैंक के डायरेक्ट ऑपरेशंस पे इम्पैक्ट था. सो उसके कारण बैंकिंग इम्पैक्ट वाज वेरी हाई. बट यहाँ पे इनका सेकेंडरी ऑर्डर और थर्ड ऑर्डर इम्पैक्ट है. सो अभी हम जहाँ पे देख रहे हैं डिमांड कॉन्ट्रैक्शन फ्रॉम बैंकिंग जितना हमने GFC में देखा था उससे कम है. बट जरूर उसका इम्पैक्ट हमारे बिजनेस में आएगा. बट कितना आएगा ये वी विल हैव टू वेट एंड सी हाउ दिस डेवलप्स.
Okay, sir. Thank you so much.
Thank you, Kushal. Our next question is from Anandi from Economic Times. Anandi, please.
Hi, sir. Just had one question. Was just looking for some commentary on the receivables this quarter, and also there could have been some ups and downs in the subcontracting costs. If you could just tell us a bit about that.
The cash performance, as I already mentioned, has been very, very encouraging, and collections have also been very strong. In fact, our receivables have actually gone down. Days of sales outstanding, DSO has gone down by 1 day. But let me give it to Ramki to add more color.
So I think in the when we closed the March quarter, as Rajesh said, on the overall collections and DSO on a year-on-year basis went down by 2 days, and from the quarter to quarter by 1 day. And from other metrics also, from our conversion, etc., has been good. But going into the quarter, we will have to wait and watch, because there will be some customers who will ask for deferred payment, etc., which we are seeing. But so far, we have not seen any cases of where there will be threat to the eventual collection. So we will have to work with the customers to see how we manage this situation without hurting ourselves, and also be conscious of where the customers are coming from. So cash flows, we will just like on the costs, we'll keep a very close watch and see how it pans out in the next few months.
Thank you. Thank you, sir. Our next question is from Joshel from PP Prime.
Arushi, we'll take this as the last question, and we'll switch to the analyst bridge. And maybe after that, if some of these people want to join that bridge also, we'll continue there. But we'll switch to that after this question.
Sure.
Sure, sir. Thank you for taking this one. It's just one question. We've seen other companies look at saving cash. They've drawn down credit lines, not declared final dividends. And TCS has declared 6 rupee per share final dividend at this point. Can you give me your thinking on how the working capital cash flows are going to be managed, as this period continues?
Well, we have always managed our business looking at our business rather than what others are doing. So I believe that the strength of the balance sheet that we have built up allows us to continue with our current capital allocation policy. And as things pan out, if there is a change to that, we will be happy enough to talk about it.
Okay. Thank you, sir.
Okay. Thank you guys for joining. Thank you everyone for joining us today. And we'll take some of these questions offline because we are running out of time. And have a good evening. And please join the analyst call. Thank you.
And stay safe.